Wall Street was overwhelmed by optimism yesterday. However, plenty of assets are braced for losses. The benchmark stock indexes lack confidence again because investors are worried about the US labor market. Macroeconomic data is painting a mixed picture. Stock investors want to play safe ahead of the government data on the US labor market. Wall Street signed with a relief on Wednesday as the high-tech sector managed to develop a rapid rally. As a result, the Dow Jones grew by 0.39%, the Nasdaq added 1.35%, and the S&P 500 gained 0.81% to close at 4,263 points. However, the major stock indexes lost their zeal in a New York pre-market. Futures on the stock indexes went down and shed 0.2 and 0.3%. The key level for the S&P 500 is 4,229 points. The bulls need to retain this level for a further jump. If the index dips below 4,203, the door will be open for a further down move. The stock indexes rebounded yesterday because of modest hiring in the U.S. private sector. The ADP payroll processor reported that the U.S. private businesses hired at the least number of employees since January 2021. In a separate report, U.S. factory orders increased in August more than expected. Still, financial markets are looking forward to a crucial report from the U.S. Labor Department, which is due on a Friday. And yesterday, the sharpest fall in a 10-year Treasury yield since August 29 softened the nerves across global financial markets. Volatility in the U.S. bond market surged to a 5-month high. In the commodity market, oil prices slumped by 5.5% intraday, to the lowest level in 10 months. It's the steepest fall in more than a year that negated all one-year gains in oil prices. In this context, battered stocks of high-tech giants gained ground. Tesla shares spiked by 5.9%, Nvidia shares rose by 1.2%, and Microsoft and Amazon shares climbed by 1.8% each. Meta shares grew by 1.5%. Ford Motors shares traded almost flat, even though the car manufacturer reported that its car sales in the US expanded by almost 8% in the third quarter. Futures on the stock indexes turned down today as investors anticipated a weekly update on unemployment claims, and the report by the Labor Department fell short of expectations. The number of Americans who filed for unemployment benefits grew by 2,000 to 207,000 last week. The figure again undershot the consensus of 210,000 and remained not far away from a 7-month low. The data confirms that the U.S. labor market stands, showing resilience to the Fed's aggressive monetary tightening. Despite another worrisome sign, the market gave a muted response because tomorrow traders will get to know a flood of data on the U.S. labor market. Even minor evidence of a cooling down in the labor market would be enough to discourage the Federal Reserve to raise interest rates this year. Besides, the ongoing decline in oil prices allows investors to exclude another factor of a potential growth in inflationary pressure. Investors are not able to put aside political worries. Things are still tumultuous in Washington, and the prospect of a government shutdown is still on the agenda. The race to replace our State House Speaker Kevin McCarthy took shape on Wednesday when Steve Scalise, the number 2 House Republican, and Jim Jordan, a leading antagonist of a Democratic President Joe Biden, said that they would contend for the job. On the one hand, political imbalance is harmful in general, but on the other hand, it can force the Fed to act more carefully. While the picture of real risks is only emerging, Fed policymakers Michael Barr, Mary Daly, Thomas Parkin and Loretta Mester can influence market sentiment today. The currency market is trading quietly today. Major currencies are trading sideways, and the US dollar index traded at 106.60 before the opening bell, after it had reached the highest level in 11 months earlier. This week, the index slipped to 106.60. The optimism of dollar bulls and a rally in Treasury yields were dampened by a modest increase of jobs in the US private sector. So, futures markets have already revised the outlook for the Fed's funds rate, though analysts reckon that the central bank needs more arguments to prove easing inflationary pressure. Investors now see a nearly 80% chance that the central bank will put its interest rates on hold. On Tuesday, they forecast a 28.2% chance of another rate hike. Long-term US Treasury yields continued to decline from a 16-year highs, while the yen, the euro and pound regained their footing against the dollar. However, today's movements were moderate as the markets are focused on the non-farm payrolls. The Canadian dollar is trading steadily today, having found support from a trade balance data, and the USD CAD pair settled at 1.3757 before the opening bell. The instrument is set to climb higher. Analysts expect to top the level of 1.3779. Canada's trade balance looked a profit of 0.72 billion Canadian dollars in August, the first profit recorded since April, and the deficit reading for the previous months was downgraded to 0.44 billion Canadian dollars. The profit for August defined expectations of a deficit in the amount of $1.5 billion. The positive data supported the loonie and helped offset the negative of a nosedive in the oil prices. Both benchmark grades lost more than one after a 5% slump on Wednesday. In the crypto market, Bitcoin and Litecoin stood out among other popular tokens. The flagship crypto was unwilling to give up, heading up for $27,790 in the pre-market. Bitcoin managed to get out of the corridor between $27,400 and $27,750, and the token could enter these borders again if it fails to climb to $28,000 and $28,200. Alternatively, the price could consolidate at $28,200 or $28,000. There is a little news on the crypto market today, but there is some good news. Kraken, the leading cryptocurrency exchange in the United States, received a huge Bitcoin deposit of 14,924 tokens, the largest since 2018. Recent events such as legal setbacks of the Securities and Exchange Commission against Grayscale and Ripple have further fueled market optimism. Keep close tabs on the market developments on the InstaForex TV channel. Feel free to ask any questions, make profits with the InstaForex, subscribe to our channel, and see you online tomorrow.